But shifting focus to Capri Global then, and remember on expectations of below normal monsoon this year, the entire sector continues to remain in focus. We have Mr. Rajesh Sharma, Managing Director at Capri Global Capital Limited, now joining us. Mr. Sharma, morning. Ashesha this side. Thank you for taking your time out and joining us here in ET now. And with weak monsoon this year, what kind of trends are you seeing in rural collections across MSME, housing and micro lab portfolios, especially in states where rainfall has been uneven on the back of expectations of below normal monsoon this year?
Yeah, no, thank you. So at Capri Global, our rural and semi-urban portfolio is showing quite resilience. It is a 100% secured portfolio. Plus, back of our collection mechanism, where our Pegasus app and other data science and artificial intelligence machine learning model are able to predict the stress, and we are able to take the preemptive action. So far, we have not seen any alarming trend of increasing delinquency beyond tolerance level.
Okay, understood. And Mr. Sharma, hi morning. This is Nehi also joining in. Let's talk about your gold loan AUM. That reached nearly 46% of your total AUM and you've guided for 50. Are you still witnessing similar growth in quarter one, however that has shaped so far? Or has growth moderated due to sharp correction in gold prices, competition, regulatory changes? If you can just give us a sense of where you're seeing the gold AUM heading in FY27.
So I think gold loan already we have about 999 branches operational, where the other verticals have about 430 branches, total 1429. However, we intend to add this year about 300 to 400 more branches, and majority will be gold. So gold AUM overall will go about 50%. And this year, and even including first quarter, we are seeing the good growth numbers. So I think as projected, we should be able to deliver again a growth of 30% plus again this year, and gold will be majority AUM as well as the profit driver.
So that's as far as the AUM growth for gold is concerned. But let's also talk about gold loan yields because they have declined despite strong growth that you've spoken about when it comes to gold AUM. Has competitive intensity increased further in the first quarter of FY27 so far? And should investors expect additional pressure on gold yields this time around, given the volatility that we have seen in gold prices globally?
So, as far as yield is concerned, when we launch the newer market, idea is always to grab a kind of a AUM of up to 10 crore as fast, because we break even at 5 crore rupees. So, we followed that strategy. Having said that, you will see that by September, there will be improvement in the yield by at least 40 to 50 basis on back of gold prices more or less stabilized. So when the gold prices go in the rising trend, the customer keep taking the top-up loans from competition or from us, and they do not default. But when the gold prices remain stable, some of the customer default, and some portion of you also collect some penal charges and higher rate of interest. So with this combination, plus we are focusing on the small ticket size of the gold loan now, where the yield will be improved. Now our more branches we are opening in semi-urban and rural. So with that combination, focusing on the agri gold loans also, I think our yield expansion you will see by September. We are hopeful to do it by 40 to 50 basis. By the year end, we hopeful that our yield expansion will happen by 75 basis to 100 basis.
Okay, sounding good. Yield expansion of 75 to 100 bips. Can you also talk to us about what's the current average loan to value across the live book and how much cushion remains before margins call kick in?
So currently our LTV in the range about 63-64%. And as per the regulatory norms, it is about 75%. You can't give more than 75. And the recent RBI guidelines have brought a lot of clarity and also allowed income assessment loan where LTV restriction have been removed. So with combination of this, I think more clarity is coming in the sector. There is no confusion on any of the regulation now anymore. The comprehensive guidelines have come. So we feel that even the gold prices remain stable, there is enough growth is happening where from informal segment to formal segment customers are shifting. Even the competition intensify. I feel that gold loan market have grown 3 times because the gold loan prices almost more than tripled in last 4 years. So with this aspect, even the competition come, gold loan business, we see the huge potential exists. And still we are only at about near 1,000 branches. The competition is between 5 to 7,000 branches. So long way to go for us.
Okay, and what is the situation when it comes to asset quality? Are there any early indicators that are visible when it comes to asset quality or asset quality deterioration rather?
So we are not seeing, and gold is the only secured asset class where gold remain in our possession, is quite liquid. So unless the cases of fraud or spurious gold, uh, I think we do not lose any money in the any of the gold loan account. So asset quality wise, to value policy, and there's enough cushion remains. So if our portfolio is 65%, easily when the gold loan default happen, at the level it reaches between 75 to 80%, you exercise your option to either do the trigger the auction as per the regulation and realize your money. So delinquency in the gold loan always have remained very in a controlled way.
Okay, understood. And lastly, Mr. Sharma, in quarter four, you guided for AUM of about 46,000 crores by FY27 end, and you're also looking at roughly 25% growth for FY27. I know it's still very early in the year, but based on trends seen in April and May, are you tracking in line with this guidance? And if you can also give us a sense of how your NIMs are shaping up?
So as far as the NIMs are concerned, they are well, more the gold loan proportion goes, the NIMs will improve better. So we feel this year our NIMs will be, and spread will be much better than the previous year. Second thing, a lot of branches have already achieved a level where they have crossed the 20 crore rupees per branch kind of AUM. And those branches are delivering very high profitability and high ROA because of the volume and the low break-even point, which is already we crossed long back ago. So with this combination, I think profitability is not the concern, and the year looks good to us. And the first quarter also, we believe that we will do better than what we have projected.
Okay, Mr. Sharma, that's a very optimistic guidance for FY27. Thank you so much for taking your time out and joining us here on ET Now. So the entire NBFC sector in focus on the back of perhaps some bit of pressure we could see on collections on account of below normal monsoon that is expected this year. But on that note, we need to slip into a very